miliyon da severim. دي هاي على كاس الكوب هاي كاس الكوب
everyday chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Tradin TV. This is your stage to shine.
Hello, hello. Good morning, everyone, and welcome to a new episode of Chat and Chart. This is the London session. Good morning to all of you. Hope you had a great weekend, and I hope you're ready for this trading week, which I expect to be good, because last week we had a decent week in terms of reasonable volatility, and we had some good opportunities in the market, which were like respecting technical levels and respecting the overall like the market condition was okay. So let's hope that this week will also have the same feel to it. We have some talks or some rumors that the US-Iran talks are not going very well. So we might see that reflect to the markets in terms of uncertainty and in terms of like maybe more pressure on the safe havens. But we'll go through the charts and see what technicals say. Okay. Hello Meza, hello Shishir, hello ZG, hello everyone. Okay, so let's start with the weekly high impact news calendar. As always, we start with the calendar, then we move to the charts. Today we have two things. The first one is we have an all-day holiday in the United States, which is Washington's birthday. So we will have an early close on like US stocks and not US stocks, the indices mainly. During the New York session, the indices will be closed. Stocks obviously will be closed as well. The stock market will not open today. And we had the GDP this morning coming from the Japanese economy. So the Japanese economy is showing signs of weakness. The previous was minus 0.7, so it was a contraction. The forecast was, after the stimulus promises and increased interest in the Japanese new government under Sanae Takaichi, the forecast was 0.4, but that was like too optimistic. The actual came in lower than the forecast at 0.1, and we saw that reflect in the early hours of today, which was Monday. That's it for today. Nothing of high impact other than those two. Then tomorrow we have the German CPI, which is the inflation numbers coming from Germany. The previous was 0.1. The forecast is 0.1. If the actual comes in higher, it means that the CPI or the inflation is picking up in Germany, putting some or like leaving the ECB keeping rates higher for longer. But it's not only the German economy that they're concerned of. It's also like the whole Eurozone. The Eurozone inflation now is below 2%, which is, I think it was at 1.7%, which is lower than the 2% target. And now they might be facing the risk of deflation if they don't move fast and start cutting rates. Now, for those of you who don't know what deflation is the prices become lower and lower. Now, like at the first glance, you might say, yeah, why not? Like, who doesn't like lower prices? Well, businesses don't like lower prices because it would make it not feasible enough for them to provide services and products. So this will cause layoffs in employees, and we will see unemployment go higher, and then eventually the market, or not the market, the economy will start shrinking. So deflation is also not good. Um, I expect to see ECB cutting rates very soon, but that's it for Tuesday. Now we move to Wednesday. Okay, so we have the interest rate decision coming from New Zealand. The previous is 2.25%. The forecast is 2.25% as well. So they're expecting no change. The actual, if it comes in, if they decide to cut rates, this would be negative for the NZD USD pair. And if the opposite happens, it's very unlikely to surprise the markets now, because markets are watching central banks closely. So I expect to see like a lower, the same reading, and we will not see much of an impact on the New Zealand dollar. Next, we have the GBP number, or the UK number, which is the CPI. The yearly CPI is expected to drop sharply from 3.4% to 3%. Now, why do you think that is? Why do you think it's expected to be much lower? Because mainly because of the energy prices. Energy prices have been stabilizing, like in comparison to last year, because this is the yearly number. So the previous reading, like past January 2025, it was 3.4. Now the forecast for January 2026 is 3%, because energy numbers or energy prices have been going down and stabilizing like over the past year. But I think that's too optimistic. 3% is too optimistic. I think we will see 3.2, maybe 3.1 maximum. But like if this comes in higher than expected, this would be positive for the GBP and vice versa. Then we have the numbers coming from the US. We have the durable goods orders for the month of December. The previous was 5.3%, which is a great number. It shows like orders for big tickets are becoming higher and higher, but the forecast is a decline of 1.8%. So I think this reading will be interesting. If it comes in in the negative, that would be very negative for the US dollar. But if it comes in anything higher than zero, which shows like growth, we would see positivity on the dollar. Okay, even if it's lower than the previous, but if it's better than the forecast, we expect to see some positivity on the US dollar. Now, finally, we have on Wednesday, we have the FOMC meeting minutes. So their last meeting, the committee had a meeting and they discussed the future of interest rates. So they will publish the meeting minutes on Wednesday. So according to those minutes, if the minutes show hawkishness, then the market will react accordingly. If it shows dovishness and it shows like a more easing tone, we would see negativity on the dollar. Okay, so that's it for Wednesday. We move next to Thursday. Thursday, we have three numbers coming from the US. We have the Philadelphia Fed Manufacturing Index. The previous was 12.6, which was like a great jump from the previous reading. The forecast is 7.8, still good, but lower than the previous. If it comes in higher, that's positive for the USD. And it shows that the manufacturing sector is doing well in the US. So the US economy is still resilient and it's still doing well. And next, we have the initial jobless claims. The last reading was 227,000 jobless claims. The forecast is a slight uptick to 229,000 jobless claims. So more people are expected to be claiming to be jobless. If the actual comes in lower, that's positive. If it comes in higher, then that's negative. Next, we're going to see the crude oil inventories in the US. The previous was a huge buildup in inventories. It was a surplus of 8.53 million barrels after like the reading before 8.5 was minus, I think, 0.1. So it was like a shortage. Then suddenly in 1 week, we saw a huge buildup. So if the actual comes in anything higher than this or close to this number, it shows that supply is outpacing demand. Demand is not as strong as expected or as it should be. While if we see it in the negative, this might show positivity on oil prices and energy prices because it means that demand is picking up and it's outpacing supply. All right. So that's it for Thursday. We move now to Friday. All right. So on Friday, we have all the numbers coming from the US. We have the PCE number, which is the Fed's favorite inflation gauge because like it's more dynamic than CPI. So we have the core PCE price index, and we have um, the GDP and the yearly PCE and monthly PCE all at the same time. They're going to be released at 5:30 p.m. Dubai time. So the core PCE monthly number is expected to have an uptick to 0.3%, up from 0.2%. So if it comes in higher, it means that the Fed should keep rates higher for longer to control inflation. Now, as for the core PCE price index yearly number for the month of December, now the previous was 2.8. It is expected to come in at 3%, which is higher than the previous and positive for the dollar because it means the Fed should keep rates higher for longer to control this inflation. Now, let's compare between PCE and CPI. PCE now, is forecasted to come in at 3%, while the CPI came in at 2.4%, which is not very far from the Fed's target. They're already approaching the 2% target. So, but they rely more on PCE. So let's see how that comes in. If it comes in higher, that it means, or like at 3% or more, it's going to be positive for the US dollar. If it comes in lower, then the opposite, obviously. And then we have the GDP quarterly number, Q4. That's the revised number. So the previous was 4.4%. The forecast is 2.8%. Now, the last 2 or 3 GDP readings from the US were surprising positively. Okay, so they used to forecast 3%, comes in at 4.4. They used to forecast like 3.5, comes in much higher than that. Now the forecast is 2.8%, and given the recent trend of forecasts being much lower than the actual reading, I expect it to come in higher, and that would mean rates are going to stay higher for longer, which is positive for the US dollar. Now, all of the things that we're seeing now are somehow indicating that the US dollar might be stronger for the next period. Now, keep that in mind because now when we move to the charts, we need to see if that aligns with the fundamentals, okay? Next, we have the S&P Global Manufacturing PMI and the Services PMI. And as always, as I always tell you, if it's above 50, then we are in the expansion territory. If we are below 50, it's in the contraction territory. Now, the manufacturing PMI is expected to drop slightly to 52.1 from 52.4. Still expanding, so no problem. The services is expected to come in slightly higher at 52.8, up from 52.7. So if those numbers come in higher, that's positive for the dollar, and vice versa. Finally, we have the new home sales. Last week we had the existing home sales. This week we have the new home sales. The previous is 737,000 new home sales. The forecast is a drop to 735,000 new home sales. Now, that's not a big difference, but if it comes in much higher than the forecast in the previous, then it shows resilience in the economy, and that shows not only resilience but confidence as well. If it comes in lower, it means that money is not moving in real estate, in the real estate sector in the U.S. economy. Okay, So that's it for the economic calendar. Do you guys have any questions before I move to the charts? Okay, Mesa, gold and Bitcoin, we will do that. Gold opened almost $25 above today. What do you mean? Like a gap up? All right, let's move to the charts. We stop sharing and we go here. Share. One second, guys. Preparing the charts. All right, so where are the charts? Here they are. You saw on MetaTrader. Now, you need to pay attention to something, Mesa. Sometimes, like, gaps happen because different brokers open the first candle differently at different times. Like some brokers wait for 5 minutes before opening the first candle. Some other brokers open after 1 minute. Some other brokers open after 10 minutes. So you need to pay attention to that. You need to know exactly when it opened, because that makes a difference in like the visual representation. You might see a like a gap, but in reality, it's like there is no gap. We'll check now on the other chart, and we'll see on 1 minute candle. All right. Okay. All right. So now let's move to the charts, and as always, we start with the DXY. Now, DXY technically is still bullish, but bullish in terms of very long term, because like it's been an uptrend for a while, not only a while, but like years, over a decade, almost 2 decades. So, but the weekly close last week was bearish. It wasn't the best close, but as long as we're above this 95.5, we're still okay on the weekly time frame. But last week's close was bearish. Okay, now we move to the daily. All right, so now the first obstacle that the dollar has to go up is breaking 98, which is like $1.20 from here. It's not very far, but it could like hold it for for a long time. But if it breaks it, the next would be the 99.5. If that breaks, we're going to face the hardest one, which is 100.4. If that breaks, I think we're going to see very high, or very strong rally to the upside on the DXY. And to be honest, I'm expecting to see strength on the DXY because Kevin Warsh, the guy that is coming to be the Fed chair after Jerome Powell, is known for his hawkishness. So if that happens and then he remains hawkish, and if he his speeches remain or show hawkishness, we're going to see better expectations on the XY, and we're going to see it go back up again. But for now, technically, we're still in a downtrend. We need to break, as I told you, 98.10, and then we need to break 99.5. If those two break, the break of this one would be very or much easier. Okay, that's on the daily. So on the 4 hours. Okay, on the 4 hours, what's happening here? Like this short-term trend was broken. Now we have this We have the 126-day moving average and 200-day moving average above the 98 level, which I was telling you that's the first obstacle. If we clear those and we close above, there is a bigger chance to break this and break the 100.5. But as long as we're below, we're still below. We don't speculate, we just wait and see. And based on what we see, we decide if we're going to change our bias on the XY or not. So before it breaks 98.10, and after, like, before I see a close above that level, I will not consider the DXY as bullish, and I will keep treating it as I should be, which is as a bearish asset for now. Okay. um, this could change a lot this week because, like, if you remember when we looked at the economic calendar, we have PCE, we have so many important data points that could actually move the dollar in either direction. But we need to wait and see. So the catalyst might come this week, and we might see a break to the upside or a break to the downside. That's why the safest bet is to stay with the trend. The trend is still bearish. Okay. So that's it for the XY. Now we're going to see the exact opposite of the XY, which is the Euro USD. Now the Euro USD closed bullish, obviously, last week because, like, it's the exact opposite of USD. But it's still inside the bands, which is like the EMA bands, which could mean, like, we might be looking at a reversal from here, but still we're above all major moving averages. So it would be very unwise to assume that it's going to drop before you actually see something that shows you that it's going to drop. If you want to look at the euro the exact opposite way as we looked at the DXY, then the equivalent to 98.10 on euro is 1.1750. That's the first obstacle we need to clear before going up, or before going down, sorry. And the next level is going to be 1.1650. That was, like, for you, like, for those of you who, like, follow me and like remember and watch all my live streams, I had a sell position here when it was like somewhere around, I think, here. So I sold at 1.1650 and it dropped all the way here, and then like I moved it to stop loss. I moved my stop loss to break even, and I got stopped out at break even. But now this resistance is becoming support. That's why I told you the 1.1650 might be the like the strongest level now, because, or the next obstacle after 1.1750. 1.1650, if that one breaks, we're going to see lower and lower prices on the Euro USD, and the last safety net Euro USD has is going to be 1.1470. So if we break below that, we're going to see lower and lower, and we might be starting a drop to the downside. Okay, that's it for the daily. We move to the 4 hours. Yeah, on the 4 hours, it's still above the major moving averages, which are the 200 and the 126. So I know it feels bearish, but like on higher time frames, but still, what we see in front of us is still bullish. So we keep on treating it as bullish until it's not. Okay. Meza has a question related to Kevin Walsh. Right now, Jerome Powell is the Fed chair. If Kevin Walsh is saying anything right now, is it going to impact heavily or lightly? Now, that depends. But that's a great question, by the way. Sometimes, if it's official, even like if he didn't take the position yet, which is the Fed chair, and like if he goes and like talks to press officially, about his future plans, like holding the Federal Reserve, yeah, that might affect the markets, because like if he says we're going to be very hawkish, yeah, then markets are going to price that in. But I doubt that he's allowed to actually say anything like that before he actually sees the numbers in front of him. He needs to take office first, take the position, and then start analyzing the situation before he decides if he's going to be hawkish or dovish. So just a theoretical question, yeah, if he goes out publicly and officially and says, yeah, I'm going to cut rates, that would be reflected in the markets. I'm going to keep rates high, that would be reflected in the markets. Yes. Please do deep analysis on gold. I will, Arif. Okay. So that's it for you. The euro, GBP, just a quick look. Unfortunately, this trade hasn't been activated. It's going very well, but I was unlucky. Placing my pending order. It was 35.05. It reached 35.08. So like it's a 3-4 pip difference. That's it. Okay. Well, last week, like it closed somehow bullish, so it's still bullish, and now it's above all major moving averages, so it could be still bullish. And on the 4 hours, okay, on the 4 hours, to be honest, I still see bullishness on everything against USD, although I feel like something is about to happen in terms of the US dollar. I'm expecting it to start rallying soon, but for now, I still don't see anything that shows me that. It's just like intermarket analysis and like analysis of the whole situation of the US and the monetary policy. So I'm expecting to see a higher dollar in the future, but so far I can't see that, or I can't see any signs indicating towards that. So the GBP USD is like almost at the trend line, and it's very close to its trend line. So like buys from here should be okay, with stops below this low, which is 1.3580, and I would target those highs easily. Yeah, so it would look something like this. I'll place my order here, stop loss here. Like the safest stop loss would be here, but you only live once. No need to be too protective. If it goes down, we'll just take another one from here with stops here. So you'll save around like 20-30 pips. So yeah, that's a 1 to 5. That would be a good trade. I will keep this. Let me 1 second. We added this alert. So when it reaches there, I decide if I want to enter or not. And on the 1 hour, still bullish. So guys, everything is still bullish against the USD, but all of this could change if this week's numbers come in the favor of USD. Okay. Okay, so let's now move to gold. I think everyone's waiting for gold now. All right, so last week closed somehow bullish, but not bullish enough. It closed inside the band, so we might be retesting this area, which is 4,730. But I have another theory, to be honest, which is, let me tell you. Let's move down to the daily and check what we have. Now, very recently, like even during the weekend, I watch news and I watch what people say, especially like analysts and banks in terms of their analysis on gold, and with like zero exceptions, everyone is saying gold is going up from those levels, and that is the first red flag, or I consider it as a red flag, because it shouldn't be this way. It shouldn't like be like that everyone aligns with, or everyone agrees on the same analysis. Everyone is saying we're going to 5,200, then 300, then 400, then we're going to see 6,000. Now, this, in my opinion, makes it negative for the gold, because now a lot of people will be joining based on this analysis that is published by big banks, and they're going to be swept or shaken out again. So what I'm expecting to see is, first of all, that's a contrarian approach, and that's a contrarian theory that I'm going uh, to say, because like so far it's above the moving average, it's above the trend line. It got rejected from this level, but if you want to be reasonable, do you think this correction is enough for all of this? Or at least, no, not all of this, but like, when did it start? It started from here. So it's been going up like crazy for the past 3 years. Do you think, do you think that this is enough? Me personally, I don't think so, but I could be wrong, of course. But for me, like, this doesn't make sense. I think we're going to see a major correction, and this was just the first leg of the correction. This was the second leg, and we might be moving toward the 3,900, 3,800, which is a very important technical level. Um, like, I have this marked out since, I don't know, like last year. So if you go back to previous like London sessions, you're going to see this on my chart. Like, it's been there forever. So let's see what that means. 1 second. Let me see if that level is actually, if that level actually makes sense. If we start from here, if we take a Feb from here, that is going to be almost a 50% retracement. Plus, it's going to be a retest of this trend line, which has been going on for a very long time. Third, it's going to be coinciding with this moving average, which is the most important one, 200-day moving average. That is the longest term moving average, which coincides with this exact level that I have like marked out since, I don't know, 4 or 5 months. Now, another way to measure it is this. What I did basically is I copied this movement, and assuming that this is the new high here, or that this is the end of this correction or this leg, if we project it from the very top, it's going to end exactly at the same level. That's why, or that's the reasoning behind me thinking that gold might go down, actually not up, because everyone is saying it's going up. And like, especially big banks, like last year, if you remember, big banks were saying gold is going to 2,850 when it was around 3,200, 3,300. And at 3,300, I actually bought. And that was like the highlight trade of the year. Against all analysis, I bought gold, and I was targeting new all-time highs of 3,600 and 700. And like 2-3 months later, we saw the 3,700, and it just kept going up from there. So I think, like, history does not repeat itself, but it rhymes. I think this is very similar. The banks are pushing hard for everyone to start buying gold because it's still going up, and now they're like raising their expectations for gold prices for 2026 to 6,000, 6,300. Now, I agree. We might see 6,000 this year, but not before we finish correcting. Now, a lot of people got shaken out of the market. A lot of speculators and retail traders got shaken out during this. But some people are repositioning now with whatever money they have left to continue going up from here. But I think it will destroy more people and shake out more speculators so that this level would become the fair value of gold, and central banks and institutional banks, like commercial banks and investment banks would start buying at those levels. So they're going to liquidate all of those people here. We're going to break all of this, and this is going to be fast, I think. And then we're going to start stabilizing around this area and continue going up. So Pearson Hardman is saying he's looking at 4,000, 4,300 closely. Yeah, this is a very important level. 4,000 is more like it based on my analysis. But again, guys, I could be wrong. We'll need to have we'll need to wait and see. But if we want to look at price action, we had this big engulfing candle here. Let's move this here to the side. We have this big engulfing candle here. We have a correction, and we might continue going down. Once we break the 4,866, once this is broken, 1 second, that would be the start of the big drop. We need to see a break and a close below this. I highly doubt that this level or this trend line or moving average will stop it. Not even this one. It will go all the way to this area. Now, I hope this was deep enough. For who asked me for a deep analysis? Arif, yeah. Arif asked me for a deep analysis on gold. I think that's everything I got on gold. I hope it's deep enough. Okay, I have another question. Meza is asking, how do you break down news? What structure do you follow for layering, or what perspective should we have to process news as swing traders? Now, as swing traders, you would focus on the narrative more than news. Okay. Okay, Shishir, I'll get to you in a second. Let me answer Meza's question. Now, what structure do I follow for layering what? Yeah, for swing trading, I was saying for swing trading, news or news releases become less important, but the narrative becomes much more important. Meaning that, what does a narrative mean? It means that the overall narrative that is being circulated in the market. You're going to hear people talk about an AI bubble, an AI bubble bust, an AI revolution. So that's all of those are narratives. Now, when you're swing trading, you need to focus on the narrative. So last year's narrative, when I bought gold and everyone was saying it's going down, the narrative was that now gold is in a bubble and it's going to and it's just going up because of central banks. But if you look at the big picture, my own narrative was the world is a mess. A lot of wars are going on, and they're becoming worse, not better. Plus, central banks are buying not because they want or they like how the gold shines. No, they are buying because they're trying to move away gradually from the US dollar and the dominance of the US dollar. So that was reading between the lines. But the whole narrative, or the common narrative, was that gold is in a bubble and it needs to go down to below 2,800, which for me did not make sense. Now, that's what I see here, or almost see here today. Now, to answer Shishir's question, I have been attending a lot of your lives. I do understand there is a gut feeling for the fall in gold. May I ask what percentage are you sure of? I'd give it 60%. I cannot be I cannot give any higher chance than this, but I would say 40% is going up, 60% is going down. So like I'm more inclined toward the drop, but not very sure of it, to be honest. Um, you are welcome, Marif. Yeah, I answered all questions. Now, since we have Mesa, which is one of the my favorite attendees, we're going to go through Bitcoin for Mesa, and then we call it a day. All right. So yeah, we got rejected from this area. Yeah. Now you see, like Bitcoin does this thing where like it keeps like consolidating, then it drops, consolidating, then it drops. I think this level is very important, which we are like, or which we got rejected from, but very possibly we might like sweep this low and sweep those lows and then like go all the way to 55, 54 before starting to go up. But like we have two scenarios. Either we go down, we continue going down to 55, 54, or we just like this rejection would be enough and we're going to start going up from here. Let me see the daily. You are welcome. You are welcome. Okay, so for now, it's still, I don't know, like it's still in the downtrend. Like no, like solid signs of a reversal to the upside. Um, I wouldn't be interested in Bitcoin yet. Like looking at it now, I'm not interested yet. I need to see a better. Um, I need to see it building ground under the the price before I start thinking of longing Bitcoin. Or I just like wait for a very discounted price, which is 55. 55 on Bitcoin is amazing. That's actually the 61.8% retracement of the whole move. Let me show you what I mean. Now, if you look at this whole movement, okay, assuming that this was the start, look, now we're currently like this moving average, the 200-day moving average, coincides with 61.8, which is around 57,000. So an overshoot like $2,000 plus or minus are fine. But the whole movement, if the whole movement is correcting, we might be looking at 55, 54, 57, like 55 plus or minus 2,000. Okay. So that's why I like this level, or like I'm interested to enter at around 55 because that's the golden zone based on Fibonacci. That's the golden ratio, which is 61.8. I would consider going in when I see it around 55, 57. And that's that. But for now, it's still going down. Yeah, so okay. What if we do this and we see the extension? Yeah, it's going to 55 as well. This is showing the same number. So one of the ways I make like I take confirmations of a certain number is when different tools like indicate the same number, or like the same number comes out um, from like using different tools. It's like, you know, when you are like solving a math problem, and uh, the math problem has to be solved like from each side to each side. Like meaning, if you start from left to right, it's going to be the same answer if you're going to start from right to left. So that's how I think of markets as well. So if a lot of tools are showing the same numbers, then those numbers become more important to me. Just like the 3,800 on gold, if that makes sense. Okay, let me see what you guys have. Mesa asks great questions. I agree. Beginner. That's why I have a lot of questions. I started trading just 5 months ago. Maze, you're doing great. Keep going because you ask great questions. Um, do I trade Germany 40? No. And now I got somebody who answers my questions. That's why I work and come up whatever bothers or couldn't solve by myself now. Happy to be that person. You're lucky you got to learn from a trader like Saif. Oh, nice. Thank you, Pearson Hardman. I remember when I started, it was a mess. All right. So I think that's it for today, guys. Nothing more to add. Just one more thing, actually. Last week, we saw a drop in stock indices, US stock indices, mainly because of the AI bubble narrative. So people started running out of Nasdaq 100 and S&P 500. So this might start to look ugly for indices, but it's too early to judge yet. But I also have a feeling, which I wouldn't execute upon, but I'm just sharing, which I have a feeling that we're going to see fireworks this year in terms of market crashes and big movements on indices and so on. All right, so it was a good session as usual. Thank you. You're welcome. Thank you for joining and thank you for tuning in, guys. It's always a pleasure to answer your questions and chat with you. So I hope this was helpful. Good luck this week trading. And if you have any questions, you know where to find me. I make sure to answer each and everyone who asks me a question. So take care of yourselves. Good luck this week and trade responsibly, of course, and trade in. Bye bye.